following the PR that just came out from Mullen Automotive, is it really as much of a bargain as they are making it out to be? Hi again, everyone. I hope you're all doing really well. So Wednesday was a bit of a shocking surprise for many in the stock, as it had a decent rebound following what was a devastating day on Tuesday. So the stock basically closed, even in the aftermarket, around where it was at the start of the trading week, which is somewhat welcomed relief for shareholders. But you've got to keep in mind, we're still down by almost 90% or over 90% for year-to-date terms. Now, obviously, what was behind this, obviously, there's a bit of a rebound. There was no short selling allowed in the stock, like effective short selling, like in day trading terms. Furthermore, there was a bit of PR release from the company, which did send a positive message. They sort of said that the company has enough cash to fund their operations now through to the next 12 months, which was good news, because if you cast your mind back to their last set of financials, given the position they were in with their debt and the available cash they had to them, they actually were listed as a going concern that they may not have enough cash on hand to fulfill, their operational needs. Now, I sort of flagged this back then, and this is kind of what has actually happened, is that they've obviously raised more money in the interim, and they've been able to have enough money to fund their operations. But what's been actually quite clever is they have actually paid down most of their debt as well. So that's actually really pleasing. So that's actually improved the underlying value of the stock quite a bit. And that should be taken as good news. Now, just sticking with the point about having enough cash for the next 12 months, that is good. So the company is considered as being of a going concern, meaning that they are not about to go bankrupt. Thank you. But we still have to keep in mind that, while we ramp up production, operations are going to start burning through some cash. So while we may have enough in the bank right now to fund the next 12 months, then there comes the question, is the revenue that they start generating from selling these new cars going to be enough to alleviate the continued operational costs that are going to be associated with the company in the future? Because if not, the company's going to have to somehow come up with more revenue, i.e. possibly see another revenue raise by issuing of stock. And the other problem we do need to consider is that they're about to start production, and there is still the chance that they might not quite get their operations in this area totally right. If there is a problem with some of the vehicles that they start rolling off when production starts this quarter, that's going to be quite a costly setback for the company. So they may have enough cash to wear those costs at the moment, but if there comes a situation where the company needs to do some sort of recall on the vehicles they've already sold or delivered, which is quite common unfortunately, for a lot of brand new EV companies that have been in the market in recent times. So there's nothing to say that Mullen is going to be no different. I'm sure they'll do their utmost best to avoid that situation, but you just never really know. When you're a first-time manufacturer of a major asset like a car, something can go wrong, or a vehicle, something can go wrong. Anyway, it was obviously welcome relief what happened for the company on Wednesday with the stock price bounce. Now, addressing the underlying value of the stock, they sort of said that there is a 38-cent per share value based on, in terms of cash being held by the company, and that looks really attractive on paper now, because they have cleared up much of the debt. So when you consider that the stock's trading at around 20 cents per share, that's suggesting that there is actually a major discount just purely on that cash asset. So you could make the argument that there is a bit of value there for Mullen Automotive. Obviously, the factor you got to consider is that cash position is going to start eroding as production ramps up, and will continue to do so unless there is either further revenue raised or the income they start generating from the sales starts coming through. So take the 38-cent valuation with a grain of salt. The company did flag that it's likely that they're not going to need to do another equity raising anytime soon in that announcement yesterday, which is obviously further good news for shareholders who've getting diluted as they have been over the many years the few years that the company has been listed, I should say. Anyway, just a few thoughts. I think it's still worth being wary. Why I would love to see the company rebound. I'm not holding my breath at this point, just because we had a strong day on Wednesday. We may still continue to see some momentum on Thursday, but you know, I still think we have to take these figures with a grain of salt with the company. I still believe that they are going to, you know, really be something in the future, but at the moment they're still in a pretty low position, and until they start making meaningful revenue and get their production sorted out, you know, we're still quite a risky investment in that sense. You know, anyway, let's just keep watching. Hopefully it can continue to turn around and I'm proven wrong. This is the start of a resurgence. But yeah, anyway, share your thoughts on what's going on with Mullen Automotive in the comments below. I always love to hear from you all. I hope you're all doing really well. And until next time, may the markets trade in your favor. Cheers.